Well, for more on the state of China's global trade relations, Simon Derrick joins us. He's from the Bank of New York Mellon. Thanks so much for being with us.
Good morning.
So these trade surplus figures, this was in line with estimates, but then you had imports shrinking by more than expected. So this is really just going to reinforce the argument that China is not rebalancing its economy fast enough. And it's going to need to allow the yuan to gain more and speed up the process.
I think that's exactly how it's going to be used, not just by the US, but by plenty of other attendees at G20 who obviously want China to allow its currency to move rather more quickly. I think the problem is, though, that we seem to be actually further away in the positions between China and the US at the moment than perhaps we have been in quite a long time.
And that's a result of QE2. Just take us through the argument that China's making when it hits back against QE2. It's basically saying that the US is just as much of a currency manipulator as anybody else.
Not just basically saying it quite explicitly. I mean, they're arguing very simply that over the course of the last 8 years, the US has used monetary policy as a tool to devalue the dollar for its own personal benefit, and that the rest of the world has suffered as a consequence as hot money has flowed out. The problem with that argument, of course, is that the Fed policy is entirely independent of US Treasury policy. I think there's some evidence of that even over the last couple of weeks.
And you can also argue that the hot money flowing in from the West into Asia isn't really affecting China nearly as much as it's affecting all of the other countries, all of its neighbors. And everybody would be greatly helped out if China would just allow the yuan to appreciate.
I am very much a believer of that. I think that the great imbalance in the world at the moment is driven exactly by the fact that there is this inequality in the foreign exchange markets, that China is able to balance it, keep its currency pegged. It's allowed to intervene effectively in other currencies, but nobody can actually play around with the Chinese renminbi. The sooner China goes, the sooner a lot of these imbalances get out of the way. But unfortunately, I don't think that's coming anytime soon.
There have been rumors that it might possibly do something ahead of the G20. You don't expect that. What do you expect from the G20?
I think that there may be some tinkering around with the level of the currency. It's always good to muddy the water just going in. But I think that over the last 2 weeks, we've seen a distinct hardening of attitudes. There was a chance 2 weeks ago when Geithner was talking about a strong dollar that maybe China had been prepared to respond. But in the face of QE2, we've already seen the US retreat on current account targets. I think we're going to get nothing at all other than words.
But what's the big danger here? I mean, at what point does this spat start to affect global growth?
I think the real danger here is that, if anything, you see an acceleration that flows out of the US. In turn, that leads to capital controls being brought in a wide range of markets as they try and stop these flows coming in. That's the danger, protectionism. That, or we end up with asset bubbles in a wide number of these markets. And it's the boom and bust cycle that is the ultimate danger to growth.
It's what many put the global financial crisis down to as well.
Absolutely. Thank you.
Thanks so much.